South Africa's economic woes have been compounded by chaos in the markets due to global factors. Earlier this week, Chinese stocks went into free fall and markets around the world plunged on concerns around the Chinese economy.
The weak rand, of course, was hit further after much volatility. A turnaround began on Wall Street yesterday, with markets posting some of the biggest gains in 4 years. That's after a US Federal Reserve policymaker said the case for an interest rate hike in America next month seemed less compelling than it did a few weeks ago. Chinese stocks back up, the Shanghai lifting by 5.5% this morning our time. Other markets were flying. But the big question is, how long will it last? Earlier, I spoke to ETF strategist and advisor Nerina Visser.
The type of events that we've seen over this last week needs to be put into context. What we're experiencing at the moment, although the reasons for the volatility might be new and different, this type of market action is not that unusual. And I think it's important that we need to acknowledge that this is something that we must expect in markets. If you don't have the ups and the downs, you can't expect the capital growth over the longer term, especially ahead of inflation. So I tried to differentiate between three types of participants in markets. The first is really your trader or your speculator, the one that's really interested in this intraday noise, this volatility. They love markets like this because it creates opportunity for them. And I think, unfortunately, the majority of market commentators that one sees comes from this area of market participants.
So they short-term thinking.
Yes, so they're quite dramatic also in the language that they use. They can be quite sensationalist in the headlines and so on. And this causes fear and panic and concern for longer-term investors. So that's my second category, really, is people that are invested in the longer term, and especially if you are investing on a regular basis, whether that is through a monthly debit order into an investment account, or whether it's the contributions, your monthly contributions to a pension fund or a retirement annuity. You are a long-term investor, and markets like this is actually great for you, because when the market falls, it's a little bit like having a sale on at your favorite shop. It's really a case of that same amount of money that's going into your pension fund or into your investment every month now buys you just a little bit more when the market is low, and when they then start rising, so does your more units also increase. The third guy is the person who's already living off his investments. So this is somebody who's already a pensioner, who's already drawing either from a living or a guaranteed annuity. And the reason why this also shouldn't concern those living off their investments is a prudent strategy would mean that your short-term needs, your money that you're going to need in the first 1 to 3 years, should be invested very conservatively in interest-bearing assets and would not be affected by what we've seen in markets this week. The longer-term money, the money that you're only going to be drawing down in 5 or 10 years' time, it's fine if there's volatility in that, because by then we know that things will have not only recovered and settled down, but certainly risen again from these levels.
Let's go to that second group, because some people have money in pension funds that you can't really touch. Others could phone somebody up and say, sell my shares, or know that they've got an investment somewhere and start panicking. And that's the temptation, to sell, but then you're selling when it's low, and everybody says, don't do that.
Exactly.
So what? Just hold.
Yeah, absolutely, just hold. And I think what's also very important is, if you know that you feel emotionally affected by the volatility, by the sensationalist headlines, then switch off the noise. Don't look at what's coming through in the market. Don't read the newspapers, because we know that this is a short-term thing, that this is volatility that will dissipate. So if it's difficult for you to manage those emotions of fear that come with it, and you might be tempted to sell, I'd say just switch it off. There's much better things to do in life than focus on the noise of markets on an intraday basis.
What about the fear just around this general economy entering a contraction? What if you're thinking of buying property in this economy, investing in a business in this economy, because people do now have global options as well? Any advice to those?
Well, I think that's maybe a much more realistic fear to have. And I think, again, it doesn't have to be a fear that chases one into inaction, but one can be creative in terms of how we deal with this. So the term going off the grid is something that we are quite familiar with when it comes to electricity generation. transition. So we see solar panels or renewable energy, we see generators coming to the fore, but there are two other types of going off the grid that is certainly also gathering pace in South Africa. The one would relate to food security. So we're currently experiencing a drought, agricultural prices are rising, it certainly will become more expensive over the coming months, and more people are actually starting to plant some vegetable gardens, to actually have a few chickens and so on. So to the extent that you can actually protect yourself, make yourself more resilient from the influences of the market, is a great way to take yourself partly off the grid from a food security point of view. But we're seeing even a similar sort of thing in terms of retirement funding. People are no longer solely reliant on the pension fund that they might be getting from the occupational pension fund or from government in terms of grants. And the concept of self-funding, self-pension savings is also gathering pace. And that's where it's important that people become more familiar and more comfortable with the sort of the vagaries of the market as we see at the moment, because that's a massive trend that we see where people will become more self-sufficient for their retirement funding than they've ever been in the past.
And nobody will retire.
Exactly. It's a different form. So it's not this idea of working yourself to death until age 60 or 65 and then a sharp cliff and nothing thereafter. It's a gradual change in the balance in your life of time that you spend working and time that you spend doing other things. And I think that actually also lends much more, not just into having savings from which you will live in your part retirement. It also means different sources of income. Maybe a hobby that turns into something that can actually generate some income for you after your official retirement. There are many ways that I think we can be creative, and our South Africans are so good at that. We are so creative under pressure, and I love seeing a time like this to see where do people come up with incredible ideas to actually look how creative people have been around the electricity crisis. We've seen some of the strongest growth in renewable energy sources anywhere in the world, and it's come from South Africans. We need to tap into that part of us.
The weak rand, does it create any opportunities or just stress for consumers because we rely on so many imported goods? So maybe you can have chickens, but you can't have everything in your garden.
So certainly it does create stress from that point of view, but I think it also creates opportunity. And we are so short on businesses, the new businesses and small, medium enterprise businesses. So it creates opportunity where there's now a possibility for a replacement offering, a domestic offering of things that you would otherwise have imported, for example. But it also creates opportunities, for example, in the tourism industry. We know that the electricity generation capacity is making it very hard for us to actually get the mining and manufacturing sectors of our economy out of the threatening deep recession that they are in. But when you look at tourism, there's simple things that we can do that can actually make a huge difference. India, for example, this week announced that they are now using e-visas. And according to some reports, they've seen increases of up to 1,000% in tourism in India.
Wow.
Those are the sort of things that we as South Africans need to address.
So you go online to get your visa?
Exactly. You don't have to go. Exactly. So I think it shows us what can be done if we are, as a people, that's government and individuals, are more creative and actually address these challenges as opportunities rather as threats in our economy.